Nervous global financial markets saw signs of stabilization Thursday, with major equity bourses and bond yields holding their ground, and the dollar wilting after the highest U.S. inflation reading in nearly 40 years. The 7% year-on-year U.S. consumer price inflation reading was the highest since 1982, but after weeks of Federal Reserve officials talking about faster interest rate hikes and stimulus withdrawal had been widely expected. As we see it, the inflation story is going to persist for a good while longer yet. Some sectors, such as technology, entertainment, commodities, returned much of the gains. Healthcare didn't have a very favorable day, poor performance. In this video, I show you the 3 entries I made in different sectors, such as technology, Microsoft, semiconductors, Micron, and retail, Nike. So, don't lose more time. Be part of this team. Like, share, and subscribe. Come to Trans Squad. U.S. stocks rose even as the producer price index soared and jobless claims ticked up. The December producer price index jumped by 9.7%, a record. Yesterday, consumer price rose 7%, the most since 1982, and new claims for unemployment benefits unexpectedly rose last week. So here, Nike opened in an upside gap, but has since closed. There is still strong resistance at this level, number 50, and a large gap zone to block for now. We can see that the indicators are still signaling a weak continuation move. I made an entry at this point with yet another rejection of the previous day's close. And I will take it up to this level, which in addition to the long shadow, we have a small gap zone. So Nike still has that long shadow to test, that is return at this point, $150. Here on the map, healthcare is the weakest sector. Technology and commodities are on the rise. Micron also started with a strong upside gap. It hasn't closed yet because the recovery is quite strong. The scenario for the stock is if Micron doesn't confirm this latest high at $98, probably starts the reversal move. We can see that there is a large graphic void and the moving average is flat. That is, there is a great chance of getting back in that range, $80. However, a major correction only happens if the stock loses this 90 level again. Here, we have strong support. I enter this level and I will take it to these shadows, working the opening candle. Risk management always needs to be very tight. It's very important. Microsoft started with a gap up, but from exhaustion, as it has already closed. Strong selling pressure in this range. Here, we have an important support zone, a trap zone, and these shadows, which limit the movement. If it's not broken, after one more test, of course, the stock recovers. But the most important zone for major movement is in this range, above $328. If the stock breaks this level, $305, we have a small graphic void here, and Microsoft can continue until $295. If it forms in this level a double bottom, it will only be confirmed at this point. So I made an entry at this point, whole number, buying pressure, and a very short stop, because you can play around with this stock too much. There is a lot of volatility. Small bullish divergency. Microsoft is on its way to this price range. That is retesting the opening of this mega bar. This always works like a magnet, which pulls the price into that range again. But I don't go very far at first, of course, because there are important zones before. So the reversal only happens up here.